Now, for the desired profit objective, here in this case, we are not at break even anymore. In this scenario, we want to get profit, meaning we want to have a net income. We don't want it to just be zero. So in this case, we have to set our targets. You can compete for your sales in units, like how many you need to sell in order to get your desired profit, or you can get your sales in pesos, meaning your total sales in pesos should be how much for it to reach your desired profit. Or if, let's say, so in these two scenarios, the desired profit here would actually be your earnings before taxes. Okay? But in this next formula, if you are setting an after-tax profit target, then this will apply. You can solve for your sales in pesos, meaning what you need to achieve in order to obtain your desired net income after tax. Now, I just want to give you a little technique in terms of memorizing or remembering the formulas presented here. The numerators are pretty similar, or actually they're really the same. Fixed cost plus earnings before taxes. Okay. But the denominators change a bit depending on what you are looking at in sales. So for example, if you want to compute for sales in units, the denominator should be contribution margin per unit. Or if you want to compute sales in pesos, then the denominator is contribution margin ratio. Now notice here, sales in pesos, the denominator here is also contribution margin ratio. For setting an after-tax profit target, the numerator is pretty long. It's like this. Unfortunately, it's something that you have to memorize, or later I'll give you a technique on how you can go about it. Now, if you want to, let's say, compute for sales in units, and you have an after-tax profit target, what you will change in this formula is just this denominator. Instead of using the contribution margin ratio, use the contribution margin per unit to get your sales in units. Okay. Now let's look at an illustration. This is actually the same example as I presented earlier in the second video. So Riri has a monthly fixed cost of 24,000, and this time the contribution margin ratio is 30%. Assume that Riri sets a target monthly income before tax of 12,000 and that the contribution margin per unit is 30. This part here was derived from our previous calculations. Just in case you're wondering, I didn't just get it out of thin air. So we need to compute for sales in PHP and sales in units. You can actually apply the formulas presented here. Fixed cost plus desired profit, and then divide the contribution margin per unit. And then for sales in pesos, you can just plug in the values here. Or if you don't want to memorize, at least know your income statement. So I hope by now you're familiar with this format. Sales less variable costs gives you contribution margin, and you subtract fixed costs, you get operating income. Now in this scenario, we are not dealing with break even, so we will plug in the values. So for example, this 12,000 here came from the monthly income before tax target of 12,000. Okay. Fixed cost is 24,000 here. Contribution margin here, this is 30%. Okay. Or you can actually say 30% of sales. And then another given item is the contribution margin per unit is 30 pesos. So I can just put another here. We don't know the number of units, but it's at 30 pesos per unit. Okay. I can just put in certain values here. Units times, we don't know the variable cost per unit. And then for sales, a certain number of units times the unit selling price. Okay. Now, once we have that, we can use algebra. So we can actually get the contribution margin already. We have 12,000 here plus 24,000. This gives you 36,000 as the peso value of your contribution margin. If you want to get the sales, given this, you can actually divide 36,000 by 30% using algebra. And you will get here 120,000. Then if you work back, 120 minus 36,000, our total variable cost will be 84,000. Now, if you just want to fill up the extra details, you can actually do that, even though it's not actually required. You can, so to get the number of units, you can divide 36,000 by 30. So that will give you 1,200 units. As I said earlier, the number of units will be the same for these three items. So let me just type that in, 1,200 units for variable costs and 1,200 units for the sales. And then we can actually compute for the selling price per unit. We can just simply divide. So 120,000 pesos divided by the number of units. That will give us 100 selling price per unit. And then 84,000 divided by 12 will give us 70. Or another way to go about this is to look at the selling price per unit and the contribution margin per unit. 100 minus 30, this will give us 70. So that's what's actually nice about filling up the pro forma income statement. You don't have to memorize any formula. You just have to plug in the values. So in short, to answer the sales in pesos, that will be 120,000. Okay. And then sales in units, that'll be 1,200 units. Now, let's look at the next illustration. This time, we have an after-tax target of 9,000. And the tax rate is 25%. So, just like the other scenario, you can actually just plug in the formula for sales in PHP and sales in units using this after-tax formula. So this is the formula for sales in pesos, but if you want to look at sales in units, you make the denominator contribution margin per unit. Or if you don't want that, if you're overwhelmed with that, you can again just make an income statement. Okay. But however, remember that we are setting an after-tax target, so it has to be after the operating income or after this income before tax. This is your EBT earlier. This time we are starting here, and then we also have your tax expense at 25, which is given. 24,000 is your fixed costs. Also, you're given. Contribution margin is 30% of sales. That's given already. So, given that, can we use anything else? Can we use anything else? Actually, we can. So, actually, this 25% is 25% of income before tax. Okay, so what this means is that your income before tax is the 100%. So 100% minus 25%, this means that this is 75% of income before tax. Okay. I hope by now you know how to go about this type of problem. Now, what we're saying in this scenario is that the income after tax, this 9,000, is equal to 75% of the peso value of your income before tax. So to actually calculate this income before tax, this is just 9,000 divided by 0.75 or 75%. So when we type that in the calculator, we will get 12,000. You can actually compute for the tax expense. You can multiply this 12% by 0.25. Or you can just subtract 12,000 minus 9,000. You get here 3,000. Okay. Now we can get the contribution margin. We can work back 12,000 plus 24,000. The contribution margin is 36,000. Now, we know that this is 30% of sales. So this means that if we want to compute for sales, we divide 36,000 divided by 0.30. And that will give us 120,000. And then finally, we can get your variable costs, although it's not being required. Okay, that will be 84,000. So sales in pesos will be 120,000. Now, if you want to get your sales in units, we have to take into consideration the contribution margin per unit. Sorry, I was not able to put it, but we're still using the same problem anyway. So actually, the contribution margin per unit was 30 pesos per unit. Now, if you have this, you can just divide 36 by 30. This will give you 1,200 units. And then remember what I said about the units. They will be the same for the variable costs and the sales. So your sales here will be 1,200 units times, we can actually compute for that, 120,000 divided by 1,200, that's going to be 100 pesos per unit. Now, that's already actually, this portion here is actually your sales in units. So if we want to translate this in English, in plain English, what we need to say would be, in order to reach the income after tax target of 9,000, Riri Company needs to sell 1,200 units, or it needs to reach the sales amount of 120,000 pesos. Okay. So, given that, you can practice and see if you understand the lesson by answering these items. Short problem number 3, number 5, and number 8.